How's everyone doing? Happy Friday. It's Friday, 4:30 p.m. What a week. We just had the 13F filings drop, and that means we got to take a look at hedge fund positioning. I always look forward to that. I look forward to a lot of things. I look forward to NVIDIA earnings. I look forward to FOMC decisions. I look forward to the non-farm payrolls report. There's always something to do. It never stops. It's always exciting. And this is the one job in the world where people pay you to have an opinion. I mean, it really is a special job, isn't it? People pay you to have an opinion. Hopefully you're right. So I'm going to focus on the hedge funds I like, actually. And then maybe in the second go around, this might be a two-parter. We'll see how much ground we can cover here. I thought this time I'd go deeper on hedge funds I like, such as Stanley Druckenmiller. We'll start off with him. I spent an hour and a half going over his portfolio construction, his positioning, the key themes. We'll talk about that. We'll take a look at 0.72. We'll take a look at smaller hedge funds that no one knows about, but I think have real skill. May as well talk about David Tepper, David Einhorn, a biotech fund, Whale Rock, Glenview, and CVS. So there's a lot to talk about. And then maybe next time we can talk about, other funds like Altimeter or something like that. So, well, let's dig in. So this is based on a compilation analysis of dozens of hedge funds that we track and study. Now, one of the questions you're going to have is, gee, if these 13F filings are 45 days late, meaning they're required or as of date, it's 45 days ago, which would be October 1st. What value does it have? I would say a significant value, because the turnover for hedge funds is a lot lower than you might think. Remember, hedge funds are pass-through entities. So if they are very active in trading, they're going to generate capital gains taxes for their LPs. I mean, Bill Ackman's been holding Chipotle Mexican Grill for how long? He's been selling that down now. Stan Druckenmiller's number one position, Coupang, has been his top position last quarter, the quarter before that, the year before that, and the year before that. So the turnover is less than you think. That said, it does make sense to focus on new positions and where people are selling. And so we'll dig in there. By the way, keep questions coming as I go through this. I'll do my best to address that. So, you can find this document, by the way, on the Lumina Wealth website. You'll have to opt into our marketing. I think that's a fair trade because we do a lot of work. We do a lot of work going into this document. So if you go to the website, I'll share it for you here. You go to Insights, you go to Trackers, and there's the Whale Watch. You fill it in, and you will get this document that I'm showing you here. So the way this is organized is we have a set of funds. There's some category label. The category label isn't always perfect. The name of the manager, and then we show their top position in terms of position size, new positions, and then positions are selling down. Okay. And we try to get a consistent color code for key names so you can find some common patterns. It's like Meta is in this, I guess, fuchsia color here. Amazon is in yellow. So right away, you can see that the number one position across hedge funds in terms of the modality, I guess the count, is Meta. That's change. It used to be NVIDIA for the last several quarters in a row. That's one quick takeaway. Why might Meta be in the pole position? Here's an idea. Well, one, as you know, Meta, NVIDIA, and Google have been our top tech names. We recently added AppLovin and Amazon. We added AppLovin in July, then the August 7th pullback, and we added Amazon after my interview with Evercore institutional analyst Mark Mahaney. But so Meta, this is a data point you may not be familiar with. Meta is introducing ads on Threads next quarter. So Threads, the competitor to Twitter, that's an additional form of monetization. So if you didn't know that, then it might not be priced in. So I think there's a broader story around Meta. I won't go through that. I've talked about Meta at length. We like that, and it's been pulling back today along with other Mag 7 names. So that is an interesting idea. The other names that dominate, NVIDIA and Microsoft, Amazon has 8 positions in the top area. In fact, actually, shoot, you can see it right here. Look at this: NVIDIA, Amazon, Google, Meta. Microsoft, I've had mixed feelings on because of the increased capex. At the same time, it's gotten a lot cheaper, and it's actually been hanging around or just below the 200-day moving average. So, but it's still not quite in the club yet. So I prefer these other names. You can see none of the hedge funds own Tesla in a top position, although there are 2 new Tesla positions that are initiated here. Let's take a look. So we have Atreides, that's Gavin Baker. And we've got Dan Loeb from Third Point, who has Tesla as his as a new position. Not a large position, but new position. I see he owns LPLA. Well, we bought LPLA, by the way. If you've been paying attention, we bought that over the summer. Interesting to see Dan buy that. That did pretty well. We bought LPLA when it dislocated right around here. When the Fed was raising rates, it dislocated, and we were accumulating here, and now it's back to all-time highs, 320. It's a wealth management business, so we know 1 or 2 things about wealth management business. It's a nice business. All right, so I'm actually going to jump straight into Druckenmiller, and then maybe we can come back to this table. I think there's a lot of analysis one can do on this table. I recommend that you take a look. But I think the key ideas of, hey, look, there's an institutional bid around Meta and Amazon. That is a good takeaway. Stevie Cohen, #1 position is NVIDIA. That's interesting. And that's informative, I would say. So, and then what are folks selling? Well, you've actually got some people that are reducing their stake in Meta. Some of the folks also long Meta. So as an example is Altimeter. So #1 position, but they've reduced their position size somewhat. That might just be some kind of tactical adjustment. Whale Rock has Meta in the top 3 position. They've also been reducing their position somewhat. So it looks like some kind of calibration that was taking place. That maybe not be a surprise because the end of September is when you had the 50 bips Fed rate cut rally. And maybe at the end of September, they were selling into strength. That would have been a good move. Now, let's take a closer look at Druckenmiller. So you can see very unique set of names as compared to everyone else, right? You don't see Meta, you don't see NVIDIA, you don't see Google here. So an original approach. Now, fun fact, Druckenmiller has over 70 positions. Over 70 positions. It's actually, by my count, it's the highest number of positions he's ever had. And by the way, if you haven't listened to Druckenmiller's interview, he's interviewed on a podcast that was led by the head of the Norwegian Sovereign Wealth Fund. I recommend listening to it and listening to it twice. It really was an exceptional interview. And I sent that to everyone on my team. Really humble guy. So take a look. This is a number of holdings Druck has in this most recent quarter. Now, he's only had 1 down year in history. So he is in the legend bucket. He may well be better than Warren Buffett. Depends how you measure best. 75 holdings. So this is actually consistent with what I've been doing in my own portfolio. I generally around 30, 35. I'm actually closer to 40, 45. Just happens to be the case that Druck is doing the same. And I'll come back to why I'm doing that and why I think he's doing that in a moment. But back to the earlier point, look, you can see Coupang's been a top position for years and years and years and years. So the turnover on these 13F filings isn't as high as you might think. There's still signal there. These are not day traders. They are investors. They're focusing on some kind of trend or theme, and they're looking for some kind of mispricing. So if you take a look at Druck, so, and I don't know all these names, by the way, so I'll try to share some high-level themes. I did try to do some work on names I was not familiar with. And I have a lot more of that to do. My team and I have a lot more to do around that. But I'll share some big picture themes. One is, as I mentioned, no NVIDIA. He expressed regret at selling NVIDIA back out in April. We saw that in the May 13F filing. So he called that a mistake. He did not get back into NVIDIA, which I thought was a bit surprising around September or so when it was around $105. You could get in the high 90s. That's interesting. So he has a lot of banks in here. I like financials. I've been talking about financials. One of the categories, how did financials do today? Let's take a look. How did financials were up today? Financials were up today. Financials will do very well in a Trump regime due to lighter capital regulations. And especially the regional banks. And if you've been following me, you know I've been talking about the regional banks. The mega cap banks will do well too, but the regional banks especially, because they don't have the deposit pressure anymore. There can be no more M&A activity. So what he has been buying, he bought the index KRE. It's 4% roughly. And check this out. He's also picking certain bank stocks. These are smaller in position size. And he's picked good names, by the way. I grew up in banks. I've worked in banks for most of my life, unfortunately. So Citizens, I like Citizens. And these are small positions, though. Again, he's got 75 plus positions. You know, you see it's almost an equal weight portfolio, but this is where he's let his winners ride, right? Coupang, it's got a larger position size because he's owned it for a long time. Same thing with Mercado Libre. But generally an equal weight portfolio, which is actually a very, very good idea. And I'll come back to this in the context of Point 72, which has a similar portfolio construction approach. Huntington Bakeshares. These are good ideas too. I don't own Huntington Bakeshares, but I've been researching this name actually. US Bancorp, Truist, M&T Bank. These are good banks. He knows banks. And here's another interesting one. He's picking up banks in Argentina. Now, a few quarters ago, he bought the index for Argentina. That was on the heels of the new prime minister who's going in there to deregulate. So he picked up Grupo Financiero Galicia, and he also picked up another Argentinian bank. Let me see if I can find it. It's somewhere on this page, maybe on that. There we go. Banco Macro SA. Let me pull up these banks for you here. So I spent a bit of time. I did buy these banks this morning, by the way. So they're up today. That's good. We like that. So you can see the valuations are attractive. You're getting into the mind of Druckenmiller here. I'm always trying to crack codes of how different investors operate and think. So I like financials. I like the Argentinian play. I like the international value idea. I think US dollar is going to top out soon. So a lot of themes line up for me here. Take a look at the numbers. This is a business has a forward PE of 8.7 and a current PE of 11.4. It's a lot cheaper than the S&P 500. And they've got a high return on equity, which is attractive. They don't have buybacks. They do have a decent shareholder yield. And are they making money? Yes, they are. They make money. You can see their net income growth over 5 years at CAGR is significant. So Druck is really good at picking stocks. When people think of him as a macro guy, and he says it in the interview, he says, hey, people think of me as a macro person, but actually it's informed by bottoms-up company analysis, which is actually how I approach things too. You got to look at the company data because you're getting real-time data, well, quarterly lag, but macro doesn't move that quickly, as opposed to government statistics, which are lagged, revised, birth, death, labor model, incentives go into the shaping of that, maybe, right? So that's a pretty interesting idea, isn't it? How about this other bank that he picked up? And look, banks are compounders, right? If you have a good ROE and you've got a dominant leadership position in the market, then you can reinvest in yourself and grow. That's why when we look at compounders, we want to look at the ROE. So it's not the only metric. This also did well today. This is the people who are following Druck, clearly, right? That's why this is up today. This is the 13F follow-on effect. A lot of people did what I did last night. They woke up this morning, they went through their positions, and they said, okay, these are some good ideas. Clearly, that's what's happening here. I've seen this before, too. It's like the Druck effect. So Another name that he owns in a top position is Philip Morris. I like this idea too, actually. I also own this name. Philip Morris went up today also. Is that not the Druck effect? It went up the day before, actually. I don't know if this, his 13F might have come out 2 days ago. I'm not exactly sure. So this is a business where they have a growth story around vapes. They've got a strong dividend yield of 4.2%. Why would you want to own bonds if you can get this? 4.2% dividend yield. Let's take a look at what's the dividend yield on the 10-year right now? I don't know, it's in the 4s, right? So it's been elevated, 4.4%. But inflation will eat away at this return, whereas the dividend yield with Philip Morris will increase in time as the company grows earnings, right? Why would you want to own the TLT? Why would you want to own the 10-year when you can buy a business like this? It's interesting, right? So that was another name that Druck owns also, which I think is interesting. I'm sure that benefited from the Druck effect as well. Probably in his first 13F, it caused a bid and momentum. Seagate, I spent time looking at last night, 6%. So this is actually a name that came up in a few different 13F filings, at least 3 that I saw today. So Seagate is a play on data centers. So he's not an NVIDIA, but he's trying to play data centers, my interpretation, through Seagate. Seagate is been around for decades, and they make hard drives. So, it looks interesting, right? From an entry perspective, the 4 PE is cheap. That implies a lot of earnings per share growth. This business, though, is facing pressure from solid state drives. Solid state drives are getting more and more efficient, and so are hard drives. So the quantity of units they're selling is decreasing, and the price per storage is decreasing, and it's a highly competitive market with Western Digital. So I don't own it for those reasons. Right? If I was on Shark Tank, I would say I'm out. Western Digital, kind of similar pattern and profile. So I would disagree with him here. Now, he might have gotten into this a long time ago, right? I haven't looked at when he got into it. So he might just not want to pay taxes. That might be it. I don't know. But I wasn't a big fan of that idea. He owns Melly. Again, I think he got into this a while ago. Freeport McMoran, which is really a play on copper. It's another way to play data centers. Kinder Morgan, which is a very good idea. This is a natural gas play. I like that idea. I like a lot of natural gas. This is a very interesting idea, Kinder Morgan. Let me show you this one. So this is a quality company. Also up today. Look, this is the Druck effect. I mean, in theory, this should have pulled back, right? It should have pulled back right here. This is the Druck effect. They said, okay, Druck owns this thing. Maybe we should own it too. So it's a good idea. I've thought about owning this from time to time. So let's see, share the screen again. Let's go back to his positions. So the other takeaway you can get from this is that, Druck isn't trying to get the exact right expression in the banks. He has this KRE index, and he's got at least 5 different banks. 1, 2, 3, 4 banks. Let's go to the second page. And these are, again, are 0.3%. 6 banks, KeyCorp, First Horizon, 7, 8, 9, FCNCA. That's a bank we have owned. There's Western Digital. That's the other Seagate. So he owns a competitor. He's doing a thematic bet. He's not trying to pick the winner in the category. He's saying, I just want to own leaders in the category, right? ARM, that's interesting. These are 0.1%. By the way, here's a funny one. Palantir, 0.1%. Now, this is nothing, by the way. He used to have a bigger position in Palantir a few years ago. This is the token position so that Palantir executives can say Stanley Druckenmiller is one of our investors. That's all it is. By the way, I met Stanley Druckenmiller at an event, and it was a Palantir event, I want to say like 5 years ago when they were a private company. I shook the man's hand. I really had no questions to ask him. I wish I did, but that was cool. I've met a couple legendary investors through circumstance and serendipity, and that was one of them. So, but yeah, this is the token position. This means nothing. This means nothing. You should not base your investment decision on positions that are less than 0.3, even 0.2%, right? This is just helping out his friends because he was an equity investor in Palantir, I believe through Joe Lonsdale. Joe Lonsdale had introduced Stanley Druckenmiller at that event. So the small world. What else? So Discover he likes. Look how many banks he has. There's a lot of financials, right? That's consumer credit. These guys are going to get bought by Capital One, presumably under a new FTC leader. MAA. This is a REIT. It's actually a very good REIT in Southeastern United States. I've talked about it before. I don't own it. I keep looking at it, and I never get in there for different reasons because I don't like the REIT category right now with higher for longer. But although these valuations look pricey, if you look at the cash flow per share, it's actually an interesting idea. It's a much more interesting idea than meets the eye. And remember, these REITs, they get depreciation, which lowers their net income, but that creates a tax shield. So PE is the wrong way to look at a REIT. If you look at the cash flow per share here, you're at around $10 next year on a price of 158. So, it's much more attractive. Take 10 divided by 158. If someone's on the line, they can do that math. It's much more attractive than this PE per se. It was a lot cheaper before too. So that's a housing shortage bet he is making. What else? So he's got TeraWulf. I don't own this. A lot of my friends keep telling me about this, say I should own it. I'm going to interview one of the co-founders of this business, hopefully soon. We had a really interesting conversation. Look at that. That's the Druck effect again. Is that not the Druck effect? It's up today. 10 out of 12 sectors were in the red. How is it that almost to a name, I think to a name, every sector, every name we pulled up here is in the green? That's the Druckenmiller 13F effect. It's probably just a one-day effect, by the way. So don't get too excited here. And it probably washes away also. So I don't own that. I don't know it well enough. When too many of my friends tell me to buy something, I just get an allergic reaction. I might be wrong. I don't know. It's just how I work. It's a strength and it's a weakness at the same time. So he owns Flex. This is the name that we tried to get on earnings, by the way. So this is like the one that got away. I'm waiting for it to pull back. It's got a good valuation. Oh yes, we got a nice little pullback here. I'm excited about this. We were stalking this on earnings, and it just shot up right after earnings. So I'm a stickler for getting a good entry. We missed that, but it's pulling back. That's good. So you can look at the description of the business here. The other thing about these Druck businesses, notice they all make money. Is there anyone here we looked at that did not make money? They all make money. Here's another bank, Barclays. He's got another REIT in Camden Property. Broadcom is his other data center play. So Broadcom is his surrogate NVIDIA. Broadcom's not a bad idea, actually. If you look at Broadcom, it's cheaper than NVIDIA on a valuation basis. And unlike the semiconductor sector, it is one of maybe two names that has done well in semiconductors. This is semiconductors. This is the SMH category. It's pulled back, right? So NVIDIA has been leading the pack and just pulling away. People have realized, the markets realize NVIDIA is capturing the bulk of the profit pool in this category, right? It just hit all-time high not too long ago, pulled back briefly. And, Broadcom is another play on data center. So you can see that he's a thematic investor. You can see the data center play. This is an e-commerce play, right? Coupang, Mercado Libre. These are Amazons of South Korea and Latin America, respectively. Coupang is the Amazon for South Korea. Mercado Libre is the Amazon for Brazil. Now, Amazon's trying to enter the Brazilian market, by the way. We'll see if the government stops him or not. But hopefully they don't. So he's a very thematic investor. He's got a handful of pharma plays, not really. I don't know this name, Ascend. I'll take a closer look at it. I did see it on a few other 13Fs. He owns Teva Pharmaceutical. This business also looked interesting to me. I've looked at this before from time to time. Look at the forward PE 6.2. You know that's going to get my attention. The entry looks interesting. It's worth further analysis at the very least. I don't like a couple things here. The price to free cash flow is cheap. So like it passes a couple initial hurdles. So that is Druckenmiller. What about Natera, his top position? I don't know this name. Let's take a look. I think I've looked at it now and then. There's one or two things I just don't like, and I just kind of walk away. But obviously, look, one parabolic, and it's been pulling back. And this business is a diagnostics company, non-invasive prenatal testing. They don't make money. That's why I don't look at this business too much. That doesn't make money. It's kind of simple, right? And it's had an incredible run, and it just concluded in this like parabola here. So we'll see what happens. It doesn't look that interesting to me now. That's also why it's his best position, highest position, because it's done really well. So remember, this is backward-looking information. About this a while ago. What else? Citibank and Barclays. Those are good ideas too, in the sense that he's buying banks with a cheap price to tangible book ratio. Both these banks have done really well. They're not the JP Morgans of the world. They're dirt cheap. Barclays, one of the leading UK investment banks and commercial banks. Look at it. It's still dirt cheap. 4P is 6.6 in a market where the S&P valuation is 21. This talks about, remember, I've been talking about growth to value rotations, how growth is going to lag value. This is an example. Isn't this an example? This is a value play. Look, it's doing really well. It's got momentum. It's got trend. It's done really well. It's got earnings per share growth. Also benefit from the Druck effect. I think these are good ideas. So we'll see what Trump's policies are to international banks. They definitely are favorable to domestic banks. So what about Citibank? Because there'll be less capital requirements. That means they have a higher return on equity because they've told less equity to run their business, right? So, I mean, this is it's just, in general, like Zoom Info. I mean, he's got, I kind of like that. I don't like Adobe. I used to like Palo Alto Networks. He's got a cybersecurity play, but not a big weight on it. His cybersecurity theme is not overweighted, right? So what else can we say about Druck? I think I covered the main ideas. Oh, he owns Vistra. This was my utility play. We got out of it. It seems to have recovered, though. After the Trump win, utilities recovered. Right, so we got out of that black arrow there. We thought it was going parabolic. We said, all right, why don't we move to other pastures? But it's recovered since the election. Less regulation of pricing contracts. Maybe there's a Druck effect again there also, right? So, but it's an impressive portfolio, though. Like Druckenmiller he's a good stock picker. Like those are good ideas. I look at that. And by the way, like we know, I don't know, maybe 2/3 of those names. So we, on the bank side, certainly like he's got quality ideas. He's a thematic investor. He's got a number of positions. He's not doing a big concentrated bet. And I think there's this false idea out there that if you want to create wealth, you have to have a big concentrated position. You don't have to do that. He's concentrated in themes. He has a data center theme. He has a bank theme. He's got a small cybersecurity theme, a small pharma theme. What else? We didn't see much in the way of industrials. We didn't see much in healthcare there, although that could change next quarter, right? We'll see, because this is as of October 1st. His approach is, by the way, most everything we saw, the trend is up. Did you notice that? Most everything we saw, the trend is up. Very simple idea. He's not trying to find value traps. He's not trying to do Buffett turnaround situations and all this other stuff. Like he's finding good businesses in uptrends, mostly attractive valuations, and the ones that are expensive, he's owned them for a long time, and he's not going to sell, probably because they don't want to pay taxes. And things that don't work, he sells out of, and I think that's the key reason why he's done extremely well. And let's take a look at what else. I want to go to 0.72 now. 0.72 actually reminds me a bit about Druck's portfolio, even though they're very different strategies. But let's pull up Point72 now. This is Stevie Cohen's. Well, it's his family office now. It used to be a hedge fund, right? Now it is no longer. So if there's one you should study closely, I would say it's Druck's. I mean, his analyst team is clearly very, very good. It's a very thoughtful portfolio. You can tell how good an investor is. Show me their portfolio, I can tell you the quality of the thinking that goes in their portfolio. It's like, if you want to figure out who's a good investor, you have to invest yourself, right? And you can see the decisions that they're making, why they made it, presumably. And I look at that, I'm like, this is a quality portfolio. That thing will better than the S&P 500, I would say, right? So let's see. Okay, Point72. Let's share my screen now here. Great comments coming in. Thank you for that. Really appreciate that. I will respond soon. So this is interesting, right? So again, end of September, early October, what are the top positions? Indices, S&P, QQQ, SPY, even here, IWM. Add that up. That's 10, 13, 14% in indices. So this was, hey, get long the market after the Fed cut 50 bips. Top position is NVIDIA. We didn't see that in Druck. Shell, one of my top energy positions, by the way. This is another one of those stocks where, why would you own the TLT when you can own, why would you own bonds when you can own Shell? Let me do a quick tour of Shell. I like Shell a lot. It's conservative. It's very boring, but it's good. You need some of that in your portfolio. The entry is pretty darn good. I think it's around the lows. I don't think it has much downside. That's partially why I like it now too. And there's my friend, buybacks, 7.8%. Return on equity, 8.3. So Shell, it's a UK oil and gas company, but it also has a natural gas play, which I like because that's linked to data center, and the price free cash flow is 6 times. And it's got earnings per share growth. I think if these guys can do a roll up in the natural gas sector, they can do well. That's not the base case. That's not what management has said, but someone needs to do a roll up in the natural gas place. There's too many natural gas players out there. So why would you own a bond when you can own a stock with a 7% buyback yield, right? This is going to reprice with inflation too. You have an inflation hedge here too, and you get a 5% dividend yield. This is why I don't like bonds. Stocks are real assets. Now, if that was overpriced, I would say go buy the bond instead, but it's not. There's no reason to own 10-year duration bonds if you can own that. If you care about principal risk, then yeah, okay, maybe you go get a treasury then, right? Why would you own bonds? 60-40 doesn't make any sense, right? Okay, let's go back to this 13F filing here. Okay, Point72. So notice once again, portfolio construction, which is actually the hardest part of investing. The hardest part of investing is assigning the weights to your portfolio. It's generally an equal weight strategy, about 40 basis points per position. And they've got dozens and dozens and dozens of positions. Stevie Cohen's a very wealthy guy. He's done pretty well with the strategy. Where's the concentration? You don't see the concentration. Okay. You do see themes. Comcast, that's a name I've talked about. The cable company, boring old cable company. Check this out. We bought this ahead of the Olympics. I wrote about it on Twitter. The day that we didn't buy it because of the Olympics, by the way. It was kind of a cute timing thing to talk about it there. So we bought it. Here was the Olympics. Actually, we were buying it here, but it wasn't working. So we were getting out. We were risk managing getting out. If something's not working, we just get out. Okay. Then we buy here and it just works. It works. And 38. Now it's in the 42. That's like what, 10, 12% return in a quarter and change. That's not bad. So yeah, and it's got a little cup and shoulder pattern forming now, right? Part of the value rotation. So the basic idea of those free cash flow and buybacks, by the way, that's the story. And they did a deal with all these streaming services. So remember, all the cord cutting was hurting Comcast. So Comcast did a deal with Paramount and Warner Brothers and Netflix also, and they said, hey, let's create a bundled package. They pay one fee to Comcast. Comcast has deals with everyone else, and then everyone can get access to all those streaming packages from the convenience of their home. So clever idea. Plus, it's cheap, free cash flow on buybacks. There's a bid. They are creating their own exit liquidity, right? So let's go back to the rest of the holdings here. Now, Buffett sold out of Charter Communications, which is Comcast's competitor. It's an oligopoly. The two leading companies in that category are Charter and Comcast, both, in my view, generally well managed. So Boston Scientific, Momentum, and so you got some more healthcare here and medical devices. Really, healthcare is a big space. More medical devices. There's Taiwan Semiconductor. There's Google. EQT is a natural gas play. This is, I think, really part of this data center idea. If you look at all this, Taiwan, EQT, seems to me like that's a data center. C is a Singapore-based gaming company, some China in here. So there's a lot of diversification, right? I've looked at GPN and payments company quite a few times. This is the one that I look at every 2 months or so. I think about buying it, then I don't buy it. Maybe I should, I don't know, but I have not been able to get there just yet. So Pinterest, Fortive, Reddit. Now, Point72, the reason they own Reddit is because they got on the IPO. That's why. Point72 gets all the IPOs. And they create alpha through their access. So that's why they own Reddit. They did not buy it on the open market like us mortals. They bought it like dollars to donuts. I'm speculating, but I'll give you odds on this one. They bought it at the pre-IPO price, 46, and now they're up 100%. If you're Point72 or you're Wellington, you get access to all, and you do prime brokerage with Morgan Stanley and Goldman Sachs, then you get access to all those deals. Now, not all IPOs are great, by the way. They have to underwrite and make good decisions there. So, but that is why they have that. So, Acadia Healthcare, Ross Store is an interesting retail. It's a very popular retail. I don't own it. It is a consensus hedge fund name. I don't mean that in a bad way. They own AMD, although NVIDIA is their top position, as we saw here. So you see data center themes at work. Adobe, I don't like it. They have a defense play in Northrop Grumman, some food materials company, 3M, Rogers Communications. So it's like the, Canada's version of Verizon, call it another energy play. So a lot of positions there, right? Look at this, is diversification. Now their turnover is going to be much higher. It's 0.72, so more active. They're more akin to like a Millennium in terms of the frequency of their turnover. So we don't know how long they've held these positions, to what positions they own. I started off by saying you can get signal from 13F because turnover is low, but that may not be the case for 0.72. Now they own Pags and StoneCo. These are Brazilian payments companies. I think they're pretty cheap right now. I owned it, then I sold it. I bought it back again recently. So Dominion Energy, I own that utility company. Actually, they also own Seagate. We talked about that earlier. They have DraftKings. So some of these are momentum ideas, by the way. Like they're just owning factors like momentum. Team is a SaaS momentum SaaS play also. Let's see, they own Apple, Clorox. Eaton is a data center play. This is a retail play, Deckers. They own Uber. No one's perfect. Let's see, CSX Industrials. They own a little bit of ASML, some Carnival, Baker Hughes Energy Company. There's Natera. That's a Druck's top position. Here it's one of their smallest positions. Corvo, Restaurant Brands International. These guys, QSR, they own Burger King, Tim Hortons. It's also Bill Ackman's, I think, second largest position, or certainly second largest restaurant position after Chipotle. I looked at QSR this morning, by the way. I couldn't get there on that. I'm not a big fan. I can explain why if you have that question. I'm happy to share why. So, but yeah, hundreds and hundreds of positions, right? The key is they're very good at risk management, and they're picking up trades that have a probability of being right of like 55% or 60% or 52%, whatever the number is, right? And that, I contend, is the best way to invest. Is what Citadel does, what Millennium does, what Renaissance Technologies does, right? So, and they're taking less risk for doing that because they're diversifying their edge across a broader space. And that's also why I've been increasing my position size too. I'll give you an example. So I bought 2 stocks before earnings this week. One did terrible, one did phenomenally well. I'll tell you, I like leading with the bad news. So I'll start there. What was this one? Progeny. So this one, Progeny is normally a stock I would make fun of, actually, because it's like a hype stock, an IPO, like venture backed, and it's got a cool story to it too. Like I believe in the thesis of fertility, but all these hype stocks have some premise. It's like those one premise movies you watch. Like you watch the movie because of the premise, like Sliding Doors. Imagine if you didn't get out of the subway car, this whole new reality unfolds, right? But these one premise movies really don't go anywhere. At the end, you left feeling unsatisfied. Progeny, same thing. So I bought it before earnings on the idea that it was that a lot of bad news was priced in and they're a leader in the market. It didn't work. It was down 10% on the open and dropped 10% more. Small position, that's fine. But it's 60% probability. That's all you need. So the other one I bought before earnings was this one, Dave. So Dave I've owned before. As you know, we talked about it earlier. This past year has been a home run, up to like 700% since the beginning. What is it? Actually, a lot more than that. Shoot, look at that. What is this thing? Was that 12 in the beginning of the year? Now it's like 90. So this has gone up 100% since we bought it in like a week or two. How wild is that, right? Funny thing is this. So I have a concentrated portfolio as well of like 10 ideas. The concentrated portfolio has underperformed my broader portfolio because I would never have owned these names in my concentrated portfolio because my concentrated portfolio is going to have the quote unquote highest quality. Things like Visa, right? Or my NVIDIA, Meta, Google. You can sleep well at night. I know they're going to do well. But if you can relax that constraint and focus on having the probabilities work for you, be the casino, not the player. That's what this idea is. That's what I'm trying to convey with what Druckenmiller is doing, what Point72 is doing, what Citadel is doing, Millennium. Those are the best investors in the world. Maybe we can learn something from that. And by the way, that's also the quantitative approach. That's what statistical arbitrage is all about too. It's about harvesting these probabilities. So I think that's the right idea. Now we'll look at a few other names. Some quick comments. Altimeter did not sell out of Snowflake. Yeah, they can. I mean, what are they going to do? Like they're selling into a falling knife where they're the largest holder. They're taking a licking on that, and the market knows that they have to that they're a seller there too, right? Thank you. I have been well. It's been good. I took my son to chess class last night. He just needs to learn how the knight moves. He's almost 6, but yeah, he's a lot of fun. He's an entertainer. He has a crush on Blake Lively. I posted a really funny video 2 weeks ago. He was talking about how he wanted to give her a kiss on the lips and wanted to buy her flowers. Really, I mean, talk about like instincts. Like he's 5.5 years old, and where does this come from? I mean, he's not going through adolescence yet. So, yeah, Palantir is hilarious, right? I used to be long Palantir in the summer of last year, by the way. Fun fact. I know I'm a critic now, but there was a moment in time, and I can find you a video where I talk about Palantir as an AI play. Just got overbought. Look, I mean, the insiders are selling. Peter Thiel's selling. Karp is selling. It's pure momentum now, right? As long as you know what you're doing, as long as you know what you're buying, then, you know, you should know the score of what you're doing. Do you see any of these hedge funds own Palantir? No, they do not. They do not own Palantir. Do they? No, none of them. Druck doesn't know. Oh, he owns that 0.1%, that token position, right? So he can go to cocktails and say, yeah, I own. No, actually, not so he can say it, so that others can say Druck owns Palantir. It's all social, right? So, all right, let's take a look at Tepper now. Now, remember, Tepper went on CNBC, and he had the buy everything moment. This was really something. So, look, he's got 38 positions. His top holding has been BABA for the entirety of this year. He really leaned into China at the beginning of this year. And China at the beginning of the year, I would say it was non-consensus, but it was consensus, non-consensus. If you were to ask someone what's the most non-consensus idea you'd have, everyone said China. consensus, non-consensus. That's what I mean by that. So what we have here in Tepper's portfolio, one, BABA, 16% position. Let's take a look at BABA. How's that worked out? This is BABA. Tepper went on CNBC around here. That's a big volume spike. The central bank cut rates around here. That created that spike. Tepper went on next day. I know that because I have a chart of FXI, which is the China index. So I track when these events take place. Makes you a better investor. You can learn what stories are at work. So China has given back the gain since Tepper went on CNBC. So what about BABA? BABA has as well, right? So this is a warning against giving into FOMO. In fact, in this 13F analysis, we can buy stocks that hedge funds bought at higher prices a month ago, and they already did the work. You should always still do the work and re-underwrite and validate. But that is always satisfying if you can get a better position into a name that others bought at a higher price. Well, that's pretty interesting. So, by the way, China is trying to encourage Chinese listed firms to do buybacks. So I still think China is actually in the bull market, by the way. In fact, we made that call back in early Feb. It's just how you navigate it is the question, right? So if you bought it around these capitulations, you're fine. But there are these massive parabolas. It's like this thing is as volatile as crypto, right? So do you trade it? If you're going to trade it, then it's a very different approach versus if you're an investor. And if you're an investor, you have to wait for these really solid entries like this. And you might never get that. But if you have a broad cross asset class approach, it shouldn't matter because you'll find some other opportunity. That's the edge of cross asset class investing. It also helps you avoid FOMO because there's something else to do. You have other ideas competing for capital. So there's Vistra. That's our utility play, by the way. So his top utility pick is VST. Again, this is the one that we owned and then we sold out of. But this is kind of interesting to see that, yeah, interesting. Good validation, I guess, for our idea, perhaps. Qualcomm, all right, that's interesting. KWeb, another China play. Adobe, Uber, I don't get those. Energy, oops, let me share my tab there. Okay, there you go. This is the top positions for David Tepper, organized by position size. So again, BABA, PDD, which is competing with BABA. So he's doing a thematic bet on China e-commerce. 27% of the portfolio, 27%. That's a massive, massive exposure. I would not do that. That's not my style. Look at PDD. Has that worked out? No, it has not worked out. Now, we don't know whether this is as of October 1st. So we know that as of this date, he had that position. He owned PDD at that price and time. Now, he might have sold here, perhaps. We'll find out. I doubt it. If you look at the turnover, did he buy PDD here? We don't know. But I don't know. I don't think I would be very happy with this kind of portfolio. I prefer what we saw before with Druckenmiller and 0.72. I like that approach better. Microsoft, I don't get that one. Meta makes sense. Google, JD, another China bet. Oracle is really compelling, by the way. And Oracle, I spent some time on Oracle. They are like a publicly listed CoreWeave in a way, except they're expensive. And, I don't know if the entry is that great right now. It's not. But I warmed up to Oracle. And the reason is because I went through the earnings transcripts. That's why. If you read the earnings transcripts, that's where the alpha is. This is Oracle. I want to buy here. Time willing, I'll come back and share with you the Oracle earnings transcript. Again, I think it's overbought, so not the right entry. So he also has some Vegas plays, Caesars, Las Vegas, other semiconductor plays, ASML, Taiwan. All these are getting hurt, right? Lam Research, ASML. These are names I've used to own. I think I own some. Yeah, I own some Micron now. I do not own ASML or Lam Research. I did own Lam Research going into earnings a few weeks ago, though. He owns Intel, kind of mean reversion idea, Chesapeake Energy. That's I think a good idea. These are interesting ideas. Antero Energy is a levered play on natural gas. This is a cyclical company. So if natural gas prices go up a little bit because of their operating leverage, then they're levered to a rise in natural gas. This is the name I'm talking about with another friend. I don't own it. I've been going deep in the natural gas category. It's like 25 names. That's what I was saying. Shell should just consolidate and buy up this category. Right now, the leader is Shineri, which I've talked about in the past. Shineri, ticker LNG. How do you get better than that? If you recall, I wrote about this on Twitter here. That was here, that green arrow, June 17th, 158. Now it's 210. That's been a home run. So liquid natural gas makes sense for data centers, right? But I want to see that theme broaden out. That's my bet. It hasn't yet. Hasn't broadened out yet. I expect it will. BlackRock is on the hunt now. I listened to their podcast 2 weeks ago. They're talking about natural gas. Like, okay, that's interesting. You know, big money is about to flow into this thing. That's not why I bought natural gas. I was positioned because I think they will benefit from data center. But it's good when you see other institutions follow you in, right? So here's David Einhorn. So David Einhorn, value investor, runs Greenlight, massive concentration in a few names. Greenberg, look, it's been the top position for years, 2019 to 23. And BHF is another one. It sounds like BFF, right? BHF, BD, KD, another one. So very, very slow turnover. AUM's dropped a lot, by the way. Maybe they got redemptions here during the hype cycle. I'm not sure. So it's like 2 billion AUM. So Greenbricks is a home builder. Greenbricks, I don't own it. For others, Consol Energy, Bright House Financial. These are names I don't know. Tenet Healthcare, I do own. Picked that up a few weeks ago. It's a healthcare company. I like this name. I'll show you Tenet Healthcare. They recently sold off some unprofitable hospitals, diversified healthcare services company, hospital operations, services, and ambulatory care. So they've been investing more in emergency services and ambulances, right? It's that part of the hospital makes money. And they've been selling off almost like a restaurant or retailer would, selling off, or a bank, like closing down the less profitable hospitals and just selling that, not closing, they've been selling that off. They do have a boatload of debt. I don't think that's an issue where you are in the rate cycle today, and they can service it. But it's also a lot cheaper than the S&P 500. And look, this thing has done very well, right? Who says you have to own growth stocks? Year to date, it's on 100%. 1 year, 160%. That's better than everything in Mag 7, maybe except for NVIDIA. And that definitely rivals NVIDIA, doesn't it? So I like that idea. I'm glad to see that he owns that. He has a gold position, or he did at the end of October. He owns Weatherford Energy Services Company. That's a name I own and then sold. It just wasn't working. He also owns First Citizens, is the bank that we saw Druck owns. I like that bank as well. First Horizon, we've seen this name come up before. We saw that in Druck. NYCB. So I own, this is now Flagstar Bank. I own this bank, actually. In fact, I wrote about this not too long ago on Twitter. The backer of this bank is Steve Mnuchin. That's the former Treasury Secretary for Donald Trump. By the way, Mnuchin bought IndyMac. Is it IndyWest? IndyMac. Anyway, another bank many years ago did pretty well with that. So the bet here is that they don't have a lot of CRE exposure, or that it's contained, identified, and they can risk manage it. Even though it doesn't look like it's moved a lot here, it actually has moved quite a lot. You know, from just the charts make it look kind of funny. So yeah, this is if you're going from like 9 to 11, I guess it's pulled back now to 1066, the Normandy invasion. So this is I think it's an interesting, really interesting idea. It's absolutely non-consensus, but the basic idea is that you're saying the commercial real estate risks are known. If I look at other commercial real estate names out there, like SLG is a commercial real estate provider. These guys are in an equity position. I wouldn't own this, by the way. I wouldn't touch it, but it's like near all-time high. There are other names like this. So these guys are in an equity position. The bank is in a senior secured lending position. They're the creditor. So they have more protection than these guys. If these guys are doing well, that means that Flagstar, which, for example, would be a lender to that business, they'll be doing okay. But when they did the deal with the FDIC, they have the opportunity to get certain guarantees from the FDIC and manage their risks better and brought in capital. So when you go do a deal with the FDIC, you walk out as a healthy bank. The FDIC doesn't do a deal with you and then create more bank risk. So I think Mnuchin and Joseph Otting, the former head of the OCC, who were both Trump appointees, I think they'll do fine. Now, again, the thesis isn't that they came from the Trump ad, but that's yet another sweetener. That's another sweetener there, right? If they need to inject capital, I don't think they'll have any issue with that. So let's take a look. What else? So owns, I don't know many of these names, owns an oil trust. Teva, we saw Teva earlier, right? We saw Teva in the Druck, very, very small position though. These are all small positions now. Highly concentrated portfolio. So different approach than what we saw with the others. And the others are doing better, aren't they? I mean, this portfolio rises and falls with Greenbrook. Let's take a look at GRBK. I prefer MI Homes. That's my home builder play. So home builders in general, I mean, look, it's like your year rises and falls with this stock price. In general, it's done well. But why do you want to have so much risk and thematic risk and idiosyncratic risk on one name? I don't get that. It's not my style, right? If you have skill, you should exercise that skill on a broader universe, right? So be the house, not the casino. Be the casino, not the player. That's the idea. Okay, check this out. Now, this is we have some biotech names. Let me show you GQG. This is a lesser known manager. They run a set of ETFs that have like 60 billion AUM. You can see they've grown quickly. I like their thought process. I look at their names and I'm like, these are interesting. When you see a manager that you think has good ideas, you want to come back and take a look at what else they're doing. So Meta, top position. Well, I like that idea. Philip Morris, we saw this with Druck too, don't forget. Eli Lilly, bear market. We sold our GLP-1 drugs exposures in spring of last year. Here's Lilly. This is why healthcare is tanking, down 5%. That's Eli Lilly. Competition, right? You've got Merck bringing on Maritide. This is Eli Lilly. Now let me show you Novo Nordisk. This is the one we used to own back in the day. It's funny, when we sold out of this thing, it kept going up and up, and we said, we sold too early, and maybe we're wrong, and now it's way below. It gave up almost the entire year's returns. Look at that. So we sold in the spring, somewhere around here. It was like right around here. I posted on Twitter, so you can fact check me there. So that is I don't necessarily like those ideas. Petrobras I used to own it. We got back in recently. Petrobras is Brazil's largest energy exporter. The key issue here is political risk. So don't put all your eggs in one basket. Again, it's a probability thing. It's cheap as hell, 5.5, 4 PE. We picked it up again, like right around here. So who knows what happens here? But it's got a massive dividend yield. So let me see if I can quote you that dividend yield. Look at that, 16.28% dividend yield. The average annual return on the S&P is like 10 to 12%. Now you're going to pay income tax on that unless you have it in a Roth IRA. But it's easier to underwrite against that versus what the stock price will do, right? So Coca-Cola, this has been in the dumps lately, by the way. Consumer discretionary has been pulling back because people realize that there's no recession. So why do you need to own defensive stocks? Take a look at Coca-Cola. This is Coca-Cola. Now, all these have, by the way, all these have pulled back. This is Coke. Coke's in a bear market now. This is a Buffett stock also. It topped when? Fed rate cuts. Fed cut rates 50 bips, And people said, why do you want to own defensives? Why don't you own cyclicals and small caps and financials? And that's why this has pulled back. Healthcare also, partially, I think, because of that effect. There's no point in hiding in Coca-Cola if there's no recession. But I think there are other issues too, right? They have people don't want sugary products anymore. So they're not growing as much. There's NVIDIA, own some NVIDIA. AppLovin, that's done really well. Cigna, I like Cigna a lot, actually. I like Cigna a lot. I think this is, I don't know why Warren Buffett doesn't own this business. I'm amazed he hasn't bought this thing, but this is an insurance company, healthcare insurance company. They exited Medicare Advantage, which is the one that's been causing the sore points for CVS, which was the canary in the coal mine, and then Elevance and United Health. So they exited that business and they're focusing on investing in businesses that actually make money. For example, providing insurance. I'll make an example to Google, which can self-insure. And they have buybacks. Also, they're very shareholder friendly. Buyback yield of 6%. Yeah, price free cash flow of 17. It's cheaper than the S&P. It's a healthcare business. The business is not pro-cyclical, right? So in a recession, they would do well. I don't expect a recession, but it's a quality business. It's a quality business, right? So there's Nextera again. This is my utility play. So I do own this in utilities, NE. So we pick that up right here. That was good. I wish I bought more of it. Unfortunately, did not, but we have some, which is better than none. Chubb, quite a few Chubb appearances. Buffett bought Chubb in May, insurance company. Don't own it. Broadcom appearance citing some travel theme here. Travel theme with British American. Allstate, I like it. I own it. And then you have some capital markets ideas. ICE. These are interesting businesses. CME Group. These are world-class businesses that will not be competed away anytime soon. They should be. They should all be on blockchain, but they won't go away anytime soon. There's ICE. Let's see. He also owns ASML. These are small positions, though. Vail, some energy companies. KSPI, I think is a really clever idea, by the way. KSPI, we own that. They're like the new bank of Kazakhstan. How funny is that? So there's a new bank of Kazakhstan, 8.14 PE, cheap and growing quickly. So look at that. Net income growth. This is obviously historical looking. I'm not trying to give you the thesis on this name or not. I'm just trying to give you, these are ideas that people don't talk about, which are interesting ideas, and they have a dominant market position. Who else is competing with this company in Kazakhstan? Have you heard of anyone else in Kazakhstan? They're dominant market leader. They own the roost. So that's a good pattern to look for. How about Biotech? Actually, before I get to Biotech, I want to go to Fine Point. This is interesting. I don't know this manager. It's a Boston-based manager with, I guess, 2 billion. Yeah, I guess, okay, 1 billion AUM or so. The number one position is QXO. Look at this. That was interesting. So I sold my QXO, by the way. It's one of the best investments of the year for us. We bought alongside the Walton family and the Kushner family. The Kushner family actually, forced us to not invest as much as we wanted. They called Morgan Stanley. We had a smaller position. It was really annoying. So the investment started here, by the way. Ignore this. This was a reverse merger, not a SPAC, but it was a reverse merger. So they filed their S1 here. Then we got in through both 9.14 cents, 9.14, which was the offering. If you can access the deal directly, you got in here. That was hard to do. That was the alpha was the access and recognizing the opportunity. I listened to him on Odd Lots twice, actually. It's really funny. So we were prepared. And then we sold between, on the way up, but between 15 and 16 primarily. So we're out of that. That was a great trade. But this guy or gal has like the number one position in this 30%. Look at that. It's wild. I mean, it's worth more than twice the cash value in the balance sheet. That was my reason. I was like, hey, maybe it can keep going like a meme stock. Could very well happen. But the cash in the balance sheet is worth half the market cap. And you need whoever they acquire. Again, they're a roll-up play in the building supply materials category. So building supply materials are things like lumber and like rebar and concrete, all that. So they're doing a roll up of this highly fragmented industry. Same thing what Brad Jacobs did with United Rentals and Waste Management and XPO Logistics, all public markets companies. He's a phenomenal operator. But if you're going to do this roll up play using public markets currency to fund your acquisitions, you need the target to recognize the value of the acquirer stock. That's what I'm not sure about. So we'll see. I was like, I don't have an edge in this anymore. Unfortunately, I had to pay a lot of short-term capital gains taxes to get out, which sucks. But the other side is I can have a 30% drawdown. So might as well just rotate and recycle that. That was the reasoning. So this name's come up, Ascend. We should take a look at that. RVMD, interesting name. I don't know these names very well, by the way. But I've seen a few of these names pop up a few times. So I want to spend more time studying that. Again, I don't know the quality of this fund or not, but I thought that the fact that they had such a massive concentrated position in QXO is interesting. Here's a really good biotech fund. I think this is probably one of the best biotech funds in the world, actually. There are 4 or 5 really good biotech funds. One is Janus Henderson. Ader is a very good biotech fund. The PM is from Austin, Texas. And Perceptive Capital, RA Capital, and Roderick Wong, RTW. I think those are probably the best biotech funds out there. Top position, again, this name, you saw this name actually, the prior 13F, right? So we're going to study these names a bit more and see what we can do in the biotech category. Biotech's pulling back, by the way. Like no one knows what Vivek will do or the new potential head of Department of Health and Human Services will do, RFK, right? No one knows. So that's created risk in biotech. You did have a lot of volume here, some climax, a lot of fear. We'll see, right? So biotech's going on sale now. So all those risks are getting priced in, which makes it an opportune time to study what's worth buying in biotech. So I think biotech could be interesting. RFK doesn't want to ban vaccines. He just wants to give parents choice. And people want to live like higher for longer. They want to live longer and better. And these big pharma companies like Merck, they need a pipeline because their IP, which are their patents on these drugs, are expiring this decade. A lot of them are, not just Merck, but Pfizer, you name it. So they need to do M&A. So biotech could be interesting, but you got to pick them well. These are, most of these companies go nowhere. So you really have to pick them well, do very, very small positions, like 10, 20 bips, like you saw that some of these other managers have. Diversify across them and take a thematic approach rather than one big biotech bet. That would be a mistake. Let's see. Can you look up Cuppies? Yes, I can do that. Let's do that. Cuppy, Harris Cooperman, he is a Puerto Rico-based manager who likes uranium and energy, and he's also on Twitter. So the name of his fund is Praetorian Capital, which is of course, we like, okay, there we go. Praetorian, the protectors of the guard for the Roman Emperor. Okay, there's Praetorian. Oh, look at, wait, no, wrong one. Where we go? He doesn't own biotech. That's clearly a mistake. Okay. So this portfolio has been in a world of pain, and he'll be the first to admit that. But it did very well the last 3 years, these kinds of ideas, right? So this is a precious metal play, A-Mark. I think they make like gold bars and sell them to Costco. Valaris, so I own this. This is an interesting play. This is bottom fishing play. I bought into it recently. It's like it's an interesting play, but a lot of its peer groups are in pain too. The Weatherford, Valaris, Schlumberger, Halliburton. These are all related companies in the energy services business. It's an interesting mean reversion idea. If you believe the day rates for renting their energy services, like these firms provide services like offshore drillers, right? if you think offshore drilling increases under Trump admin, could be interesting. But the real thing is China. Like Russia is cranking out boatloads of oil on unmarked tankers, and that's hurt the price of oil because they need to just generate revenue to fund their war machine. So that's why oil's been in the dumps, and China is still on its heels. So oil hasn't done well. I think it's a high risk, high vol play. I think when you've had pullbacks of this kind of magnitude in the past, generally it's been better to be a buyer, and global central banks are cutting. So this is Tidewater. It's another similar play. They're all kind of the same idea, by the way. They're all kind of the same. They're different companies, but the same thematic idea, right? So same thing, right? So that's his a big bet in that 21%. Imagine that 21%. It's wild. I can't do that. It's too much. St. Joe's a home builder with a lot of Florida real estate. It's an asset play. I'm not there. Sprott is a uranium issuer of the uranium trust. Tidewater we talked about. Remitly is a payments company. This one is the one thing that doesn't fit the group here. And there's a biotech play. Don't really get that. Remitly does cross-border payments. So they're in the world of stable coins and trying to displace Western Union, and I don't think use stable coins. They should, but I don't have a view on this. I just don't know it. So that is check Brookfield, bought by Bill Ackman. Okay. So I reviewed the funds I like. Again, I thought the Druckenmiller portfolio, and I do think it's the quality of the thinking, the themes, the position sizing. And that's the one you really want to study here. I thought that was very, very good. I'll spend more time on that. What else? All right. So you guys are going to make me study Bill Ackman. Okay. Brookfield. Yeah. So he picked up Brookfield. Brookfield lost a bunch of money in commercial real estate for their LPs. That doesn't matter for Brookfield, a management company. So, it's the expected earnings growth is high. It looks like it's pulling back here, had some buyer exhaustion there, right? But I don't see it. I don't see what's so special about this business, but I don't know. Again, I don't know their thesis. So that's part. I don't know Bill Ackman's thesis around it, but I'll try to create one. Let's see if I can ask my AI tool to make a thesis for this. So if there's another manager you want me to look up, you can speak now or forever hold your peace. So in the meanwhile, we'll pull up Brookfield Corporation and try to get a quick view. Then I'll have to wrap it up shortly. My son is going to Taekwondo class tonight, so he can kick my ass when he gets bigger. Let's see. Okay, Brookfield is processing. Please have session on super investors. Bill Ackman. Bill Ackman is not a super investor. I'm sorry. Chuck Aker. I don't know Chuck Aker, but I can take a closer look. Bill Ackman does the high quality dislocated asset play. He likes compounders. I don't know. It's not terribly interesting. So what else? So I'll call it a wrap there. Let me see if I had any other notes that I wanted to share with you. Again, I wanted to go deep on funds Glenview. Sorry, before I wrap up, Glenview is a very skillful healthcare investor, right? It's run by Larry Robbins. So what did he do with CVS? It was one of the first things I did, by the way, when these 13Fs came out. What did he do with CVS? He added to CVS. It is his largest position. I'm going to pull up his holdings for you here. Just give me a second here. So he also picked up Cigna. So I thought that was interesting. Okay, CVS, let's see. Glenview Capital Management, there we go. There you go, look at that. So CVS, top holding 15%. That's a major, major position. I've only had a position of this size once, by the way. It's a big position. Tenet, we own that. We like that. We talked about that. Global Payments has came up before. Cigna, that's come up before. He owns small caps. I don't get that. Again, this was as of October 1st. This is after the Fed cut rates 50 bips. It might have been that idea. UHS, good idea. It's a really interesting healthcare services idea. Travel play. Tiva, remember we saw Tiva a few times now. Maybe worth studying. McKesson is a name Warren Buffett sold out of. And as soon as Warren Buffett sold out of it, it started doing really well. Classic. Happens. Happened when Buffett sold Delta Airlines too, by the way. Just happens. The selling pressure goes away. Buffett was getting out of it right here. Now it's like back to where it needs to be. I don't like this because the margins in the business are too low. But we did, my team and I, take a close look at McKesson, trying to find reasons to say no. I don't know why Uber's in here. I don't know why some of these non-healthcare names are there. Western Digital, once again, clearly people in the Hamptons are talking about Seagate and Western Digital. As I mentioned, I don't think it's a great idea, just given the increased competition. There are other ways to play data center, but that seems to be an idea. Match Group, interesting idea. I prefer Bumble, but interesting idea there. So CVS top position. Now, I'll tell you what it was CVS. CVS, we had this interesting moment here where CVS was above the 200-day and it came down here and then it zoomed up there. So on this day, we actually exited our CVS. But then we bought back in the last 2 days. We're back in the CVS. But look, it's I think the lows are in. It's this is a free cash flow story, right? This CVS story is a part of the bigger issue around the increased healthcare utilization, creating an impact on Medicare Advantage, which impacts Elevance and United Health, right? So all of these names have the same issue, like chickenpox spreading. It hit CVS first, but now you can see that it's hit everyone. The difference is CVS is farther along and cheaper. So it's more time to price in all this stuff and take corrective measures. So I think CVS is better than these other ideas like Elevance, but I think Cigna is super interesting because it doesn't have any of those issues. It's just a quality business. So I like that idea. Again, healthcare and defenses are pulling back. There's a new Health of Human Services. So there's some policy noise around this category, but that will get priced in. That'll create some opportunity on the other side of it. Seth Klarman, Baupost, that's a great idea. We should take a look at what Seth Klarman is doing. Seth Klarman is the founder of Baupost, legendary value investor, written a few books around this stuff. You can see turnover is relatively low. So there's value there. He's been holding this name for years and he owned eBay before. This is the stuff that you will not make friends talking about these names at a holiday party because these are not sexy names. Like you're not going to find, you can find Google here. Google's I like Google too. It's the cheapest stock in Max 7 and they're growing earnings and doing buybacks. Communications plays. Dollar General, so some dumpster diving there, right? Dollar General probably is better than Dollar Tree, but can they compete with Walmart and Target, who now have e-com and curbside delivery and tariffs from China? So if tariffs go up, Dollar General's cost of goods sold goes up. But before this meltdown in Dollar General, these were considered really good businesses, by the way. I know it's hard to imagine that now, but if you go back over like a 20-year, this is a 10-year time frame, look, an incredible run. Now people hate these names. So I don't own it, but it's an interesting, phenomena to see the revulsion in Dollar General. I mean, you see that in other assets too, like digital assets last year were hated. It was a great time to buy. But here again, with those tariffs and increasing competition, it's not the same story. I think it's harder. It's harder. I'd rather stick to players I know are going to do, or I think will do well, like Abercrombie and Fitch, maybe Dick's Sporting Goods, right? So that is a 26% position. Look at this in this one name, Liberty Global. Let's take a look. Liberty Global. Okay, so this benefit from the Seth Klarman 13F pump effect, probably, right? So people looked at that and they said, okay, this guy owns a bunch of this, although he's owned it for several years. I don't know the name. I got to study this. It's a communications play, right? And communications actually has been doing well. People aren't talking about it though, right? Look at IYZ. Here's the ETF for IYZ. I mean, it's going like parabolic. So that's an index. So this is more evidence of the growth to value rotation that we've been talking about. Let's see. Top holdings are Cisco and Verizon, and look at T-Mobile, by the way. I don't own these. I'm just pointing out fun charts for you that you may not be aware of. This is T-Mobile. The thing is going like parabolic now. Look at that, right? It was at 140, like what? It's 240 now. So in 1 year, 60%. I mean, so there are a lot of things to do in value. I have no doubt about it. What else? So look, we'll call it a wrap there, and maybe next week I can dig into Altimeter or maybe more tech names and just other popular managers. But I try to focus on managers that I like and I respect. I like Seth Klarman, by the way. I don't see the ideas that he's going after there, and we probably have different time frames that we're investing against. And all right, so thank you all. Have a wonderful weekend. I'll see you in a bit. Cheers. See ya.